Hi, this is Atmir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 9th of April. Starting off with the FTSE 100, which looks well settled within this bull flag between around 78.90 and 8,010. Looking for a breakout to the top of that rising trend channel from back in December, 81.30 by the end of this month. If we do break down below the 78.90 area, then there's the risk of a test of the post-December resistance around 77.80, but at this stage we are looking up, especially given that uptrend line in the RSI window and the RSI at 66. Moving on to the DAX, which is trying to consolidate, albeit just below the higher levels. So the floor of that rising trend channel from October around 18,000, and that was the old March resistance as well. So we're hoping that the market will find support at or above that zone. The overall trajectory here up to as high as 19,500 by the end of next month if we remain above 18,000. Below 18,000 risks a test of the 50-day line, 17,600 and initial March support. Moving along to the Dow, which is basically trying to bounce from just below the 50-day moving average, still trying to work out where the channel is, the channel floor around 38,500, obviously the recent support, so that makes some sense. Above the 50-day line, looking for the market to at least retest recent resistance just shy of 40,000. Looking for a best case scenario target by the end of probably next month now at 40,600. Obviously it could happen a bit sooner. If we do break down, then 38,000 and the February support area is the worst we are expecting at the moment. If you're cautious, maybe you want to see the RSI back above neutral 50 rather than 47 as it is at the moment. Bitcoin is next, and here you can see that after that little break of that March resistance line yesterday, we're back on it really around 70,500. We want to see the market stay above the floor of the rising trend channel from back in January. That's nominally around 67,000, and the worst case scenario on the downside now, hopefully no lower than the 50-day line at 65,000. We haven't been below the 50-day moving average since the first week of February, so hopefully that will remain the case. In terms of the upside, if we do clear that March resistance line, then we're looking for as high as 83,000, maybe not by the end of this month, but sometime in May. But 83,000 by the end of next month, I suppose, would be a conservative target, while we're above the 50-day line around 65,000. Gold has made the headlines of late, and here you can see why. We just narrowly missed our target there, 23.80 by the end of this month by $8. Hopefully we'll have another go soon. In terms of support, it's probably around the 22.80 to 90 area, which was our previous target. That should become new support for this market, and ideally we get up to 23.80 or 90 in the first half of April. Moving on to crude oil, which had its golden cross to start the week, and doing well in terms of that break of that resistance line there around $84.50. That resistance line there from basically the quite a long time ago, actually, the early summer of 2022. So we've broken a trend there, near 2-year trend above the mid $84 area, looking for up to $105 maybe by the end of next month, but obviously the initial target there, $95 and last September's resistance. We do break down, not seeing anything worse now than the $83 area, which was the mid-March resistance. Moving on to the stocks, and starting off with the Aquis market and Ananda, where some signs of life here. It looks like a rising trend channel base based around the 0.3 pence area. Decent end of day close today above the 50-day moving average again, as we had yesterday. Could be the start of a move towards the 0.45 pence area, maybe by the end of this month, but nice pattern there over the near term with that rising trend line from back in November. On to Audioboom, where lots of positive noises and executive hires to go with it as well. Here we've got a decent development with the rebound not only off the floor of that rising trend channel from August, but now we've got the 50-day moving average rising, which is normally a good sign that we're ready for a breakout through the main £2.70 resistance, or 73 resistance that we've had for the last couple of months, and that could mean that the shares head up as high as £3.80 plus at the top of that August trend channel as soon as the end of next month. But that rising 50-day line and the bounce off RSI 50, decent indicators on the upside. Moving along to a stock which I've almost regretted looking at yesterday because it was a bit of a falling knife situation, but we did break recent resistance at 0.1 and looking for 0.2 or 0.25 for Byotrol, which would be quite a turnaround for the shares given the rather nasty price action that you can see on the left-hand side of the chart. E-Star is next, and this has been a bit of a no-brainer winner really on a fundamental basis, but also on a technical basis. We had an unfilled gap to the upside to start April, broke that gap up day at 2.5 pence and hit our initial target there at 2.9 pence, above 2.9 pence. We were upgrading the target there to as high as 4.3 pence, the upper parallel of that rising trend channel base from June, and looking for 4.3 pence at least by the end of this month at the current rate of progress. A company which has taken a leaf out of E-Star's book is First Class Metals. The company's realized obviously that exploration companies should prove up and then sell up in terms of the assets they find, and here we've had a rebound off the floor of this broadening triangle from back in January, and the view at the moment is above the initial April resistance at 2.85 pence. We could head up to 4 pence maybe by later this month, but early days on that, so let's see how we go, especially the main thing is to stay on the right side of that 2.9 pence area. Next up is a stock which has also been in the wars, but looks like it may finally be coming back. We've got Hellenic Dynamics, and here breaking that falling wedge which has been in place since basically the beginning of February. The line broken there around 2.6 pence above that. Obviously looking for the 50-day line at 3 pence initially, but then up perhaps by the end of next month as high as 4.5 pence if this is indeed the end of the bear run. The main point here is that we stay above the initial March support, the former low there at 2.5 pence for as long as possible. Moving on to MetalNRG, MetalNRG, and here you can see that we had a bear trap from below the December support area, 0.047, and above that looking for 0.08. The reason for the optimism is the way that the 50-day line is now starting to rise. We did have a false dawn back in February, but hopefully this will be second time lucky for the bulls, especially if we can stay above the February resistance around the 0.5.5 level, especially, and being above the 200-day line, very close to that. First appearance for the following stock is Orchard Funding, and here a nice gap close situation back above the floor of the gap there, 18.75 pence, looking for the shares to easily fill the top of the gap there up to 24.75, and ideally over the next few days, a few sessions, perhaps 26 pence. Obviously there's another gap there to fill up at 32 pence, but let's see how we close today, ideally above that 50-day moving average at 21 pence. The billions of barrels seem to be floating around at Pantheon, and it's finally affecting the share price. We had that rising trend channel there, which I pointed out previously. We had a target there, modest target there around 33 pence. Above 33 pence, obviously, there was a September resistance area just below 40, but we have been looking for a move up to support on the way down at 51 pence, and we're looking for that by the end of this month, that old support there back in February last year. Upside value while we hold above the 38-39 pence area on an end of day close basis. Moving along to Synairgen, and here you can see that we seem to be emerging from this extended malaise that the shares have had. Unfilled gap to the upside through the now rising 50-day moving average, so this looks quite significant. Looking for a retest of 10 pence as soon as the end of this month. It's a punchy call, but we have quite a punchy setup and punchy candles over the last 3 sessions. The unfilled gap to the upside helping the cause as well. Moving on to Tern, where the shares seem to be managing to fight back against the mudslinging that the company seems to get all the time for no apparent reason. Maybe if you're a bull, that is. Here we've got the shares back above the old January resistance there at 3¼ pence. Above that, looking for 5 pence by the end of this month. Very strong candles there over the last four sessions. In fact, pretty strong, apart from one day since the last week of March. But that rising 50-day line and the way that the shares didn't need to find support after they broke above the 50-day line suggests that 5p, whatever the bears say, could be on its way. Moving on to a stock which was called here rather successfully, one could say. The reason for the bullish notion was the unfull gap to the upside on the 4th of April, and I suppose the shares then around 2.5, 3p. They've doubled since then, and more than doubled in fact, and we're looking now for best case scenario target as high as 9 pence by the end of this month, probably while we remain above resistance on the way down from back in this time last year, around 5.25. So that's also the low today as well. So above 5.25, looking for 9 on Tungsten West, and clearly something rather exciting is brewing there. Moving on to Xtract Resources, which is feeling the benefit of higher copper prices, one would guess. Here we've got this broadening triangle from back in the summer. The top of the triangle there around 1.5 pence, and we're looking for that by the end of this month while we remain above the 1 penny area. So above 1, looking for 1.5 on Xtract. Finishing off with another bulletin board hero winner, Westminster Group, and maybe a rather unlikely one, but not dissimilar to the tungsten pattern, except there was no gap here. But I think the break of the big update that we had on the 28th of March, the break of the 1.95 pence level, really the thing that did it. We had an initial target there at 2 pence, second target there at 2.75, and now we can upgrade that to an October resistance line projection from 2021 as high as 4.5 pence, hopefully over the next few sessions. But very nice move there on Westminster Group. That's it from me today. More updates tomorrow.